Imagine this. A company places its entire future on one of the most unpredictable assets in history. Bitcoin. Yep, that's exactly what MicroStrategy did. This isn't just a dabble or a side investment. They've re-engineered their entire business around Bitcoin, essentially becoming a corporate crypto hedge fund. MicroStrategy, a company once known for its business intelligence software, has transformed into the ultimate Bitcoin believer. And at the helm of this transformation is Michael Saylor, their maverick CEO. Saylor's not just an investor, he's a crusader for Bitcoin. His vision? To make MicroStrategy the Fort Knox of Bitcoin. Let's give you some background. MicroStrategy started in 1989, making a name in data analytics. By 2020, they were a mature, stable company. But when COVID hit, Saylor started worrying that traditional cash was losing value as the Federal Reserve kept printing more and more money. Imagine your cash savings as ice cubes. If you leave them out, they'll melt away. Saylor looked at Bitcoin as a deep freezer for that cash, a place to freeze MicroStrategy's assets and preserve their value against inflation. So he went all in, converting MicroStrategy's cash reserves into Bitcoin. Today, MicroStrategy holds over 252,000 Bitcoins worth about $18 billion. That's more than the GDP of some small countries. To get all this Bitcoin, they issued bonds, sold shares, and even took on debt, all with the goal of buying as much Bitcoin as possible. Saylor has basically turned MicroStrategy into a Bitcoin holding company, like an unofficial Bitcoin ETF. An ETF, or exchange-traded fund, is like a basket that holds an asset. In this case, Bitcoin, that people can buy shares in. The catch is that an official Bitcoin ETF requires government approval, and regulators are cautious about approving one because of Bitcoin's volatility. MicroStrategy has sidestepped this by becoming a proxy for Bitcoin. When people buy MicroStrategy stock, they're effectively buying exposure to Bitcoin without actually holding it. In a sense, Saylor has made MicroStrategy the DIY Bitcoin ETF. But here's the big question, is this genius or...
Joining us, Michael Saylor, MicroStrategy Executive Chairman. You never stop adding to the position of your company, and you have a lot of courage because there's been a lot of major swings in the past. And there were times when I was worried. Can you tell me, were you ever close to margin calls? Anything ever happening to MicroStrategy?
Well, when Silvergate Bank failed, we had to redeem that, but it turned out to be a benefit for us. We made a lot of money on that redemption. We repaid our Silvergate loan. But it's been a great journey. Since August 10th of 2020, MicroStrategy's bought about $8.3 billion worth of Bitcoin, and Bitcoin's up 44% a year on average since then. The S&P's up 12%. And since we levered it, we're up 825%. The number one performing stock in the S&P is NVIDIA, up 821% as of Friday. So we beat every single company in the S&P index using a Bitcoin strategy.
Does MicroStrategy now do anything else?
We still run the software business, and it's generally a cash cow for us. But our primary business is a Bitcoin development company. So what we're doing is we're securitizing Bitcoin. We're selling convertible bonds for people that don't want the full volatility and all the risk of Bitcoin. Some people want 150% risk, right? So some people want highly levered equity, and they trade the options. And so we have a very big, deep, rich options market. We've got high-performance equity, and then we've basically pioneered the Bitcoin-backed bond market by issuing all of these convertible bonds that are backed by 5x more Bitcoin collateral.
Has anything changed in terms of, you think, the investor class that's investing in your stock versus now investing, for example, in an ETF? Obviously, one is more levered than the other.
Yeah, if you're investing in the ETF, you're getting one-for-one performance, paying 25 basis point fee, no yield. When we issue a $1 billion convertible bond paying 1% interest, we're capturing a 50% premium or 50% type BTC yield on that up front, and then we capture another yield on the back end. So if what you wanted was a sort of a tax-deferred yield on your asset, or you wanted to tap into the convertible bond market, like if you wanted to borrow $1 billion for a percent,
right,
buy Bitcoin with it, hold it for 7 years, you can't do that as an individual, but MicroStrategy can do it.
What have you made? Right now, I think I just saw a headline that $1.2 billion in outflows took place out of the Bitcoin ETF. And I'm curious sort of what you think is going on with the impact of the ETF on the price of Bitcoin.
I think generally it's been a good thing, and it's created more demand. But you got to keep in mind that Bitcoin is smart, fast, strong money. So on a Saturday night, if you're worried about a missile strike, you can't teleport your $10 million apartment to Singapore, lever it up 10 to 1, and short $100 million worth of New York real estate. But you can short $100 million worth of Bitcoin by borrowing $10 million. So you have a lot of fast money traders, a lot of volatility, and that will cause and ripple into volatility in the ETFs.
Can you explain
this? That's okay.
Can you explain this, though? You know, one of the things you just talked about, if there was a missile strike or something, there was a sense that people talked about this as digital gold. And maybe you still think that's the case, but it often doesn't act like digital gold in the midst of a missile strike.
Yeah, it's the most liquid, fungible, free capital market in the world. Your New York apartment's not fungible. It's not liquid. I can't panic sell it. So when there's a short-term panic, Bitcoin is trading really, really hard.
Isn't it supposed to be the opposite?
Over the long term, it's up 44% a year every year, and you either get 12% from the S&P with VIX vol, or you take 3x the vol to get 44%. So over the long term, if you're an investor, it's going to be great because it's strong capital. Over the near term, if you're a trader, you get lots of arbitrage opportunities.
Let's break down some of the financial terms and risks involved. When we say MicroStrategy is taking on debt to buy Bitcoin, think of it like this. They're putting their Bitcoin bet on a credit card. They've borrowed hundreds of millions to fund their purchases, just like you might swipe your credit card to buy something you believe will go up in value. The risk? If Bitcoin's value drops, they still have to pay back that debt, and they'll be left holding a much less valuable asset. MicroStrategy's financials tell the story. They reported a net income loss of $340 million in September 2024, along with a $430 million operating loss. These losses raise eyebrows because in finance, debt is usually like a double-edged sword. If things go up, they go up fast. If they go down, they sink hard. And Bitcoin, as we know, is like a roller coaster, thrilling, but risky. Analogy. Think of debt as a seesaw. When things are good, it lifts you up higher, but if things go bad, you're brought crashing down even faster. In 2008, Lehman Brothers, a massive investment bank, went bankrupt due to excessive leverage. They borrowed too much, assuming assets like real estate would always go up in value. When the housing bubble burst, they had to pay back debts they couldn't afford, leading to their collapse and the financial crisis. MicroStrategy's gamble isn't as widespread, but the risk of using debt for a volatile asset is similar. If Bitcoin crashes, they could be in serious trouble. So why is no one else doing this? Why aren't other CEOs turning their companies into Bitcoin forts? Simple, most CEOs want stability. They want their cash to be safe, secure, and predictable, something Bitcoin is definitely not. Bitcoin can gain or lose value by double digits in days, which is far too wild for most traditional companies. Saylor, though, isn't your typical CEO. He's a visionary in the mold of people like Elon Musk or Jeff Bezos, willing to take massive risks because he believes in a bigger payoff. Saylor sees Bitcoin as digital gold, an asset that could become the world's primary store of value. He thinks it's a long-term bet that could make MicroStrategy incredibly valuable, if he's right. Analogy? Think of Saylor as the poker player who keeps going all in on every hand because he's sure he's got the winning cards. Other players are folding because the stakes are too high, but Saylor? He's playing big. And here's the thing. So far it's working, mostly. Bitcoin's price has skyrocketed over the past year, reaching above $76,000 today. That means the value of MicroStrategy's holdings has grown massively, and its stock price has followed suit. For every 10% rise in Bitcoin, MicroStrategy's stock gets a nice bump too. Investors looking to ride the Bitcoin wave are jumping on board. But it's not all sunshine. MicroStrategy's traditional business, the one that made it a stable company before the Bitcoin craze, is now almost an afterthought. If Bitcoin's value crashes, so does MicroStrategy's. And unlike traditional assets, there's no government safety net for Bitcoin. This is high-stakes crypto chess with no undo button. Let's be real, most CEOs wouldn't touch this strategy. They don't want to stake their company's future on something as unpredictable as Bitcoin. They prefer to keep cash reserves in safer assets, like US Treasury bonds or diversified investments. After all, don't put all your eggs in one basket is a core principle in finance. Think of Bitcoin as the spicy sauce in a dish. A little can make things interesting, but too much can overpower everything and leave you sweating. MicroStrategy isn't adding a dash, they've poured the entire bottle in, and critics have a point. If Bitcoin crashes, MicroStrategy could face a financial disaster. But if Bitcoin fulfills Saylor's vision and becomes a global store of value, he could be remembered as a financial visionary who was ahead of his time. Take Warren Buffett, for example. He's famously skeptical of Bitcoin, calling it rat poison squared because it doesn't produce anything tangible or predictable. Unlike stocks or real estate, Bitcoin doesn't generate cash flow or profits on its own. Its value is driven purely by what others are willing to pay for it. Buffett's approach is rooted in long-term, predictable value, the opposite of what Saylor is doing. So, here's the big question for you: is MicroStrategy's gamble on Bitcoin genius or madness? Will Saylor be remembered as a visionary or as a cautionary tale? And with talk of a new Department of Government Efficiency or DOGE led by Donald Trump, there's a wild thought. Could the government end up embracing crypto and boosting coins like Bitcoin and even Doge? Could the Doge finally have its day? Let us know what you think in the comments. So, are you going long on MSTR? Are you as bold as Michael Saylor? Comment below and let us know your thoughts on this high-stakes Bitcoin play. If you enjoyed this dive into MicroStrategy's Bitcoin experiment, smash that like button, subscribe to Knowledge Drops, and hit the bell so you don't miss any of our upcoming insights into the world of finance, tech, and beyond. Until next time, remember, knowledge is power, and sometimes a little bit of Bitcoin madness.